Okay, so what kind of situation do we currently have on USD JPY? Now, from a monthly perspective, the first thing that we can notice is that the market has been rejecting this very major trend line to the downside. So, I will be more precise, this very major trend line to the downside. And since the market is rejecting it, we can expect the rejection to continue. However, at the same time, what we also must notice is that the reason for which from this level here, the market tried and went to test the trend line is because we have very strong monthly support. So from the monthly time frame, what we can take is that the market is currently trapped in between this support and this resistance. Let's go down on the weekly and see what kind of situation we have. Now, from a weekly perspective, the structure is even more clear, the support. We know that on the weekly, from here, the market started this huge move to the upside. The zone acted as very strong support again, extremely strong support again, and strong support again also here. So what we can expect, since we have seen this strong rejection to the downside, is the market to go and test this zone one more time, considering that the market is also rejecting the monthly trend line before making the move to the upside and actually managing to break the trend line. But let's go one step at a time. From here, what we know is that we might see the market actually go and test this zone again. It's definitely something expected because it would bring also the creation of this M formation, the creation of a lower low, and is definitely a strong level that the market should go and test to grab some liquidity. Let's go down on the daily time frame. Now, on the daily time frame, what we can see on the daily, we can see the huge impulse to the downside that the rejection of the monthly trend line created. And what we can also see is that the retracement, even though it did retest the previous support, which is now turned resistance, okay, it never actually created a proper retracement. What do we mean by this? Now, after you see an impulse in the market, if you want to measure the retracement, what are you supposed to be doing? Taking the Fibonacci on the impulse, right? So let's do it here, okay? We have the impulse. If we want information on the retracement, what are we supposed to be doing? Taking the Fibonacci on the impulse. And what we can see is that the market never made it to actually test the 0.382 Fibonacci retracement, meaning that the market could still want to go and basically create a complex correction before the continuation to the downside, which would also lead to a nice stop hunt for all the people that shorted this resistance. They probably have their stop losses here above. So that would be great to go and grab some liquidity before the continuation to the downside. So the way in which we will be approaching USD JPY with students is very simple, and I will now show it. But first, let's go and see what kind of situation we have from a COT perspective. So commitment of traders, what big banks and institutions are currently doing on USD JPY. Now to see that, we have to check the JPY data. However, what we must notice is that all currencies on the spot are traded against the USD. So what we will actually be checking is JPY USD. So if we want USD JPY, we simply have to reverse everything. And what we can see that net positions have been increasing a lot. In fact, we went from minus 56K all the way up to plus 22K. So we went from having way more shorts than longs from an institutional perspective on the JPY to having way more longs than shorts, with 43K longs and 21K shorts. So we can definitely expect the weakness since the JPY is so strong, because as I just said, everything is reversed. So if we go back to the chart, how we will be approaching this with students. First of all, we will be waiting for a clear stop hunt. If the market will actually go up here, test the 0.382 that we have identified earlier, and go and hunt all the stop losses above this high, what we will be doing. At that point, the 4-hour time frame will be very bullish because it will be creating higher highs and higher lows. So what we will be doing is, first of all, inside of this area, waiting for clear bearish price action. So for the big boys to actually start shorting, only after the market from a 4-hour perspective will have shifted from a bullish market to a bearish market, then we will add USD JPY on watch list with students, and we will be waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. If from here the market will just melt, we will have to adapt to the new market structure, and I will keep you updated also here on TradingView. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.